Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. It is Wednesday, the 29th of August, 2018. We are just about into our September month, and typically the September month is one that we start to see some pretty decent movements one way or the other, on a more macro scale, after what's normally, the dog days of summer. But we've had a pretty bullish August. So my feeling is that I think we're going to see a little bit of profit taking over the course of the next couple of days, heading into the end of the month before a holiday weekend in the U.S. market. So let's go ahead and dive right in. For those of you new to the channel, do me a favor, click that subscribe button down below, hit the notification bell so that you get the alerts when they become available. Also, for those of you that are unaware, go to TradersArmy.com so that you can join our live trading rooms. Why drop thousands of dollars on trading education if you can get a mentorship in a live trading room and dip your toe in the water a little bit, if you will. So give it a shot. All right, let's dive right in. So the S&P 500 today, we are up 1/4 point in overnight trading, but that 1/4 point is really just holding on by the hair of its chinny chin, because really starting from about midnight last night, 11 o'clock, it looks like we've pretty much been selling off. The whole time we've dropped about 6 points. Not huge candlesticks, not a huge drop, but we have started a little bit of a sell-off. Now, what does that mean for me? Well, it means that I'm not shorting it. You don't tug on Superman's cape, you don't spit in the wind, and you don't short an all-time high. So I'm not doing it. I'm going to wait for price to drop down into a quality area where I'd be a willing buyer. There's an opportunity, I think, if you want to take a long on a breakout above this area. I think you may get an opportunity for a long, or I would look down here at a reversal. Looking at the Nasdaq, we are up 12 points in the Nasdaq, so it's actually not pulled back quite as much. So if you're looking for a long, and this topped out exactly 7,600, right? So you've got a whole round number resistance up there at 7,600 in the Nasdaq. If you wanted to get long on a breakout just above that area, I would not be against that trade opportunity. If you look at the last time that we had a breakout. Now, by the way, the last breakout on the Nasdaq, we waited, it looks like 1, 2.5, almost 3 weeks before price broke out, and we got a pretty nice move out of this, right? We got 97 points from our breakout. Some of you still may be riding that thing to the upside. So I think if you're looking to get long, you've got another bite at the apple, if you will, on a breakout above 7,600 in the NQ. Looking at crude oil now, here's where a breakout went bad. We came screaming down into this level here, and then we were unable to hold that breakout. Price hit that level, and then it just kind of continued. It popped back up, and we did not fall down through that level. I actually genuinely anticipated us to break down here and continue to fall, so that one did not break down below where we expected it to. So that would be a small loss on the breakout on crude oil. However, no big deal, as we are, it's a fairly small loss, fairly tight level. Ideally, that would have been made up by something a little bit bigger on a move. And then gold, we just missed entry, just nicked by a tick on our entry. In gold hasn't quite yet come into play, and so I'm still going to leave this on. I think this one still could be valid. So gold is still in the cards. Let's go ahead and take a look now at the bond market. So in our bonds, we had a breakout a couple of days ago, and it's, as Limp Bizkit would say, it keeps rolling, woo. It's the worst Limp Bizkit ever. Keep rolling. And we've rolled down and it's continuing to move down. And by the way, this is what we look for, right? We look for something in the bonds, if the breakdown occurs, to continue its run down. And this one has done that. It started its move down. It's kind of continuing that move. But what we would anticipate is that at or near this target point here, we'd be pulling money off the table. And I think there's a good chance to be doing that now. We've come back up into a fair price value area on this gap fill level. If we get really above that, I would probably be looking to take some profits. In the Aussie, we got a real little touch and go level, but we've gotten almost no movement out of it. So this is a touch and go on a 15-minute level that we found yesterday. But I don't like the way that we've reacted off the level. So if you're in it, for me personally, I'm taking the stop, moving it up to break even. I don't feel like this is going to give me the bounce that I want. And so without that, I would definitely be looking at getting out, right? I don't feel like this has the oomph to give me the rally that I would want. So take your stop. I would take the stop, move it to break even, because it's just not reacting the way we expect it to in a good opportunity. In the euro, we have gotten a really nice move off this level right in through here. Yesterday we talked about a level that kind of popped through, and now we have a little bit of a downward price action, right? As we've got our lower swing high and a lower swing low. So this is the definition of a downward trend, right? When we get lower swing highs and lower swing lows after one another. We broke the upward trend. And remember, trend lines can be very, very subjective, because I very well could have just drawn that same trend line right here, right? So I'm not a huge trend line guy. What I do care about is the higher swing highs, higher swing lows. And in this case, we have swing high, swing high, swing low, swing low. So I've got higher swing highs, higher swing lows. This is the beginnings of a downward trend. If you are so inclined and you wanted to just catch the momentum as it continues to go down, look to get short on a breakdown below that area. You could also get a reversal trade to here, but typically in a good solid trend, if that trend is going to continue, you're not going to retrace back all the way up to this area. You'd have to go find a potential reversal on a smaller time frame, and I think we've already gotten it with this wick right here. So this is a breakout short below that area to get into the existing trend line. Speaking of breakouts, in the Canadian dollar, we had a breakout yesterday. And our Canadian dollar, we rallied up above this level and got a pretty nice move out of it. So this is one where I would also, you've got a little bit of a buying area down here. If we break below that level, I'd be out for a small profit. So take your profits and run. Was that go take your money and run? Woo hoo hoo. All right. So next, we're going to take a look at nat gas and copper. So nat gas, much like our position in crude oil, take a small loss. Price came into our level. We started to get a little rally out of it. I said, oh yeah, here it goes, baby. And then that's exactly what it did. It just fell right through the area with a small loss on the nat gas position. Great British Pound still didn't meet entry on this confirmation style of an entry. Nothing really to add. Japanese yen, I will say that I do see us putting in a bit of a pinching pattern here. So just keep an eye on this. It's not officially a triangle pattern as of yet, but just keep an eye on this pattern kind of pinching out a little bit. And then copper, we gapped up. We've traded down a little bit, and I see that reversal. Both of these reversals are still very much in play. So when we look at kind of our day, we had a little runner in the Canadian dollar that is continuing to work out. A nice runner in the bonds that's continuing to work out. A little reversal in the Aussie that's right. It's not failed on us yet, but that one is still up in the air. We have a potential trade in the euro on a short breakdown in that level. We have a potential trade on a long in the Nasdaq on a breakout above that level, and then we have the failed trade in crude oil for the breakout. So that's a pretty busy day that if you took all of those trades, you doing pretty well. Now, if the only one you took was crude oil, then you're not feeling so good. And that's why I think it's important to spread your trades around and not just trade one or two things. And if you don't have the capital to do that, then just be pretty selective in what you do trade, and just stick to that plan over time. The key is getting those small losers and small winners to cancel each other out and letting those big winners run, right? You look at all these trades that we've shown over the course of the last couple of days. The NQ, as I tweeted out yesterday, very well could have made your week on the breakout that we talked about. Now, we set that breakout up weeks ago, right? And so the level we looked at today may not meet entry for weeks. And if it doesn't, that should still be okay. It may still be a viable entry and a viable opportunity. So that being said, those of you that are interested in some of our individual equities, so if we're going to take a look at some individual stocks, we've actually got a number of individual equities that we look at in our live trading rooms. So go ahead and go to tradersarmy.com to learn more about that. Until tomorrow, everybody, I will see you soon. Later.